Our next speaker from IMB, another one of our supporters at the Chamber. We like to invite Clair Messiha to give her dissertation of where she sits and how she looks at small businesses and business lending, and from a business perspective, how it works well. And supported, thank you for Joshua and Elise from IMB also coming along today. Please welcome Clair to the stage.
Okay, so today's presentation I'm going to be talking about cash flow management, so how to effectively manage your cash flow. So I'll just be covering those 7 points. What is cash flow in a business context? Does this change between industries? Usual cash flow drains? Maximising your cash flow, tech solutions, credit solutions, and then putting it all together. Okay, so cash flow in your business. So cash flow is the movement of cash into and out of your business during your normal business trade. For example, if you run a corner store, your outflows would be rent, utilities, cost of goods, advertising and staff wages. Well, your inflows will also be sales of goods, sales of unwanted assets, loans from the bank and loans from shareholders/directors. So managing your cash flow effectively by reducing the time it takes for cash to flow into your business and maximising the time before cash flow flows out improves your financial position, assists in making sure you can pay yourself on time, pay your bills, etc. Does this change between industries? So cash flow is important to all businesses. So whether you run a store, you're a professional service organisation, provide technical services, the rules are all the same. What will change is what the outflows and what would the inflows be. For example, if you are someone who provides technical services such as a dentist or an electrician, you will potentially have significant startup costs whereby you would need to purchase equipment to begin trading. You also likely need to replace or upgrade your equipment over a certain time or period as they do wear and tear or even can become obsolete. Whereas if you're in a different service such as an accountant, lawyer or recruiter, your startup costs for the business may potentially be lower as your equipment is the experience and the training you bring to the role. That said, all businesses still need to maximise cash flow to stay afloat and grow. Okay, usual cash flow drains. So big costs are some of the things that we do need to watch out for, and these include rent, salaries, loans, utilities, and equipment finance. Make sure you understand clearly when they are due and how much they are. It is important to review them when possible to ensure you are getting the best deals. So more about that later. Maximising cash flows. There are a number of factors can help you achieve positive cash flows. So basically, getting the basics is quite important. Keep your finances to date and know where you are at all times. Too often, people who struggle with cash flow neglect to put time aside to keep their accounts up to date. In some instances, this is because they are very busy in the business, or maybe they're not that great at managing accounts. In some instances, a trusted friend or hiring a bookkeeper or an accountant by the hour pays for itself in the long term. Other tips may include invoice quickly and include payment details on your invoice. Consider using payment systems to make it easier for your customers to pay you 24/7, so EFTPOS, PayPal, direct debit. Offer discounts for fast payments. The money you may lose in discounting is made up if you don't use credit to then pay your suppliers. You can also consider hiring some equipment or sharing between non-competing local colleagues as part of an overall strategy to reduce your fixed costs. Also, using shared offices can be a cheap way to provide professional image to clients at a significantly reduced rate, and some businesses allow you to rent space by the hour. When it comes to paying your bills, always pay on time, but don't pay early unless you get a discount for doing so. You may ask your suppliers if they will give you a discount. If you are purchasing products overseas, make sure you have an FX strategy to hedge your risks. And work with smaller suppliers who will also negotiate where possible and they understand your business needs. Limit bulk buying of stock, as this can increase risk through tied up cash and the increase of risk of having to discount the value of stock to sell it urgently. Many companies have moved to just-in-time stock systems, which mean they commit to large volumes over a year but only order small quantities over time, tying up less cost. And if you do want to try a new range, just discuss a possibility of consignment on a return policy. So going now to tech solutions. So don't be afraid of technology. There is a lot of user-friendly systems that now exist. Make sure you avail yourself of all possible tech solutions, including your managing inventory with a solution that allows you to measure stock turns, average discounts, etc. Point of sale that allows you to quickly measure how much you sell, how much you discount. Accounting software that allows you to quickly see the health of your financials. There's FPOS payroll, if applicable. Ensure it's built into any web presence you may have. The more you have to double handle and manual transfer things, the less likely you'll keep it up to date and the more likely of cost miscalculations. Credit solutions. So many people may be surprised to learn that many bankers will advise cash flow problems are not always solved by credit. Your bank should talk to you about the solutions available to you rather than just offering you credit upfront. Many of the tips upfront reduce your reliance on credit and increase your cash flow at the same time. At times when credit is required, there are a number of solutions including overdrafts, debtor finance, equipment finance, commercial lending and business credit cards. One thing a lot of people don't think about, however, is insurance, especially insuring the business owners. This is important if you have two partners who may have spouses that are not working in the business. Some insurance allow each partner to buy out the other partner's spouse in the event of death. It's much cheaper than credit. Putting it all together at times can be challenging. Many small businesses owners are experts in their field and passionate about what they do and how they do it, but may not always have the expertise to manage cash aspects of their business. Alongside a good accountant, who is always important, should be a banker you trust. Many people do not go to the bank often and even less even know the name of someone who works in the bank. But it's important to form a relationship and meet regularly, at least annually, to discuss how things are going. Make sure that the money is working hard as you do, ensuring you have the best fit products, especially important as your business grows. You are minimising unnecessary risks, fees, etc. Many of my clients are also surprised to know that I do work closely with accountants if asked to do so, and to ensure the strategies implemented by the accountant is complemented by the bank. Okay, that's pretty much it. Thank you.